On June 12, 2026, everyday investors finally got their hands on SpaceX. The company offered shares at a fixed price of $135, instantly raising roughly $75 billion in cash. This bar chart compares the world's most valuable tech companies on that specific trading day. You can see SpaceX's market cap shooting past both Amazon and Microsoft, landing near a staggering $1.8 trillion valuation right out of the gate. Because Elon Musk retained over 82% of voting control through a dual-class share structure, the math on his personal fortune surged. For a brief moment, he was widely crowned the world's first trillionaire. That exact title depends on who you ask, since trackers like Forbes and Bloomberg treat private stakes in his other companies differently, causing their daily estimates to disagree by tens of billions of dollars. But exact math aside, this euphoric opening week was the climax of over 2 decades of private market buildup. It established an absolute high watermark for the company, and it set up the sheer height from which the stock was about to fall. This line graph tracks the aftermath. After its debut, the stock hit $225 before plummeting to the $108 range. The empty space above the crashed line visualizes the reversal. In 6 weeks, SpaceX shed over $1 trillion. Musk himself acknowledged the reversal on social media, posting 2 blunt words: former trillionaire. How does the most highly anticipated public offering of the decade unravel this violently the moment it hits the open market? To understand the crash, we have to look at 3 specific catalysts that hit the stock at exactly the wrong time. The first blow didn't actually come from SpaceX. It started on July 22nd with financial contagion from its sister company, Tesla. Looking at Tesla's Q2 earnings data, we see their free cash flow dropping deep into the red at negative $1.1 billion. At the same time, the company's capital expenditures, the money spent on building physical assets, surged by 142%. The market response was immediate. Tesla stock crashed by over 14%. It did not fire all of its planned landing engines during its return to the Gulf of Mexico, hitting the water hard. If a software company pushes a bad update, they roll it back at almost zero cost. Space, however, is a brutal hardware industry where physical anomalies cost billions of dollars to fix. Wall Street looked at this engineering reality and decided not to buy the dip. The third force driving the price down is structural. On August 6th, the insider lockup period expires. This area chart illustrates the incoming supply shock. Right now, only about 4.9% of SpaceX shares are freely tradable. When the lockup ends, analysts calculate that roughly 912 million new shares become eligible for sale, which suddenly expands the available float to nearly 12% overnight. And short sellers are circling that exact date. These traders have already built up roughly $15.5 billion in unrealized paper profits by betting against the stock. Despite Musk publicly warning short sellers that their survival probability is low, short interest continues to grow. Depending on the tracker, it now consumes anywhere from 32 to 56% of the available float, so the continued price collapse makes mathematical sense. The open market is simply front-running the expected wave of insider selling. We can see this tension by looking at this stylized scale of SpaceX's valuation. On one side is the punishing financial reality. The stock trades at an incredibly high price-to-sales ratio of 84 times, anchored by a $4.28 billion net loss in Q1 2026. On the other side sits Wall Street's institutional optimism. The stock holds 27 active buy ratings and an average 12-month target over $236. That creates a massive disconnect. Institutional analysts are mapping out targets near all-time highs, while actual open market trading is struggling to hold the line at $110. While engineering milestones like Starship launches and satellite deployments continue at a record pace, the share price remains tethered to the more immediate pressure of investor scrutiny. Everything now hinges on 2 dates. August 4th brings the company's first ever public earnings report, followed immediately by the August 6th lockup expiration. Those 48 hours decide whether the stock finally finds its floor or if the crash accelerates.